Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy.
Happy Monday.
Happy Monday to you. Not a happy Monday for Zoom Video, maybe investors at this point. It's been a drag down for this one. Now, Andy, you know, this company, they provide free cash flow. They're accumulating customers. They've got, you know, money on their balance sheet, but it seems like the growth is just stalled where it can't be valued maybe where it was during the pandemic because they're just not seeing any real growth for this company.
Yeah, it's tough. You know, during the pandemic, this was kind of the default option of everybody that wanted to continue to operate, whether you were school, organization, business, small business, large business. Everybody needed Zoom, and Zoom was right there in the right place at the right time. Now, you know, it's a very different playing field. You know, we're seeing strong evidence that, you know, these large business buyers of Zoom, these kind of institutional clients, are starting to really pull back on the hybrid model, the work from home model. You know, we're just seeing CEO after CEO talk about how this just really isn't working for their culture. You know, Boeing, UPS, Nike, Walmart, some really big names are getting out in front of this and saying, this isn't how we want to work going forward. It was great during the pandemic, but you know, here we are in normal times. We want people in the office. We want creativity flowing. We want that serendipity that sometimes happens in office environments. So Zoom has that headwind coming at it. The other headwind coming at Zoom, you know, is the competitive factor has, you know, changed very significantly. You know, in the pandemic, it's pretty much Zoom or bust. And now, you know, Slack has some very good video conferencing tools that are integrated with the normal workflow. Microsoft has very good video conferencing and meeting solutions that are integrated right into the software that it's already selling to all of these businesses. And, you know, we're seeing the results of that in Likefolio data. Zoom, you know, web visits are down significantly year over year. Consumer happiness levels don't stand out. We just see this as a company that has gone through the maturation process extremely quickly and did an unbelievable job of doing so. They scaled, you know, at a phenomenal rate and really delivered very well for all of those customers. But now it's kind of like, what's the next growth phase for this company? Why are they a better solution than their competitors? And in both cases, I think it's very tough for them to deliver a high quality answer that makes Wall Street want to pay a high multiple for the company.
Andy, it seems they're moving from small and medium companies to more enterprises that's giving them bigger numbers. They're also, it looks like they're going through their own little year of efficiency here. They cut headcount by 15%. They restrict corporate travel. They fired all their outside consultants. So they're tightening the reins. And it's not like no one uses them. They still get used. The stock is down about 8% in the last year, about 80% off its highs. Is it still too early? I mean, eventually this stock will settle in to a reasonable PE, which its PE right now is pretty reasonable. They're buying back stocks, so they have an opinion that they're not expensive. Are we just too early? What's the real story? Are we waiting for some type of big valuation buy? It seems like it's late for us to be waiting for this thing to turn back up.
Yeah, I agree. You know, I don't think I can't see any big catalyst for this company that's going to change the narrative that essentially this is a company that went through, you know, a complete business boom bust cycle and is now on the slow bust side of the equation, because it's really hard to see why, you know, the Walmarts, Nikes, UPSs, why would they change their mind and say, you know what, we are going back to hybrid or remote work? Or why would they say, you know, we're going to choose Zoom over Microsoft or Salesforce's Slack? It's just a really tough argument to make. You know, they have some contracts, they have some, some really nice B2B contracts that give them visibility of revenues and earnings well into the future, but it's that next renewal of all of those companies that I think Wall Street's very concerned about, and for very good reason, because they're not the unique solution, and there's not, an overall tailwind to their business, and that's a tough spot to be when previously you were the only bell at the ball.
Yeah, and last quarter this stock popped over 12% post earnings. Had a pretty good report, pretty good guidance for EPS moving forward. Andy, and then Meta Platforms announced it's shutting down its enterprise communication tool, Workplace, and they said, hey, go use Zoom Video. They actually gave them a little bit of kudos there. So when you look at the competitors in this space, you mentioned, the Slacks of the world, Teams is in there. They've got their own services that maybe most of these companies are paying for, but their enterprise customers grew 9.8% to 3,810. So that's probably a good spot. But when you look at this company, the competitive pressures, if I'm already paying for Microsoft Office, I can use Teams and not even have to use Zoom Video, right?
Yeah, I think every time that the Zoom Video contract comes up for renewal, it's going to be scrutinized against solutions that the company doesn't really have to pay extra for, and that's a tough spot to be in. But Zoom is a very good company. They've executed very well. They've created great products. They continue to innovate with good products. So, this is nothing against the company. I just think that they were put into a spot where they boomed and bust within 4 years. What normally would have taken, 10 to 30 years. It's just a completely different time, and they did a fantastic job with that. How they move forward is they continue building, better products that are worth the money to their enterprise clients. And I think, that it's very possible that they'll be able to do that. It's very possible that they'll continue to be able to grow, 10, 15% in terms of the number of customers and that revenue number. The only problem is that this is a company we got used to looking at it through the lens of hyper growth, and now we can't. And so what multiple do we land on? Even if they expand profitability, which I think they will, again, they're a very good company. They're going to continue to execute, but what multiple can we put on them? It's a very different conversation than it was 2 or 3 years ago. We're talking about very different numbers, and we just have to let the market settle out. I don't think that there's any reason to be anxious to get into this name.
So you got an earnings score for us, Andy, going into this report?
Yeah, pretty neutral with a little bit of a downside bias just because of some of the reactions we've seen in similar sectors this earnings season. So I think it's priced about right, or maybe could have a little bit further to fall.
All right, great stuff, great data. As always, Andy, appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down Zoom Video.
I was really hoping he'd start our Monday with something positive and